Welcome to Abidi Stock Market Learning. The beginning is most important. In this video, we are going to discuss the reason the candlesticks are so popular among the professional traders. There are 12 reasons that the candlesticks are so popular among the professional traders. Moving on to reason number 1, leading indicators. Candlestick chart have the ability to show the reversal signal earlier than the Western charting technique. As such, the candlestick chart are a truly leading indicator of market action. They regularly identify the potential moves before they become apparent with the Western technical tools. Move on to reason number 2, pictorial. Candlestick charts are very pictorial and describe the state of player psychology at a particular moment, which can be utilized to make a meaningful trading decision. The candlestick technique consists of hundreds of different patterns group that actually identify the specific behavior and tendencies. Move on to reason number 3, versatile. Candlestick charts are versatile in that they can be used alone or in combination with the Western technical indicators tool. They are unlike point and figure charts, which cannot be used alongside other Western technical indicators. Candlesticks use the same price data as the bar charts, yet the candlestick technique better promotes the ability to organize the complex pattern groups and predict the next possible outcome based on them. Move on to reason number 4, can be applied to any time dimensions. Candlestick charting technique can be adapted for either short or the long-term trading. Candlestick charts are excellent for short-term trading through the use of intraday chart like the 1 minute, 5 minute, 15 minutes, 30 minutes or an hour charts. They can also be applied for long-term forecasting through the use of daily, weekly and monthly charts. Move on to reason number 5, flexibility and adaptability. Candlesticks are flexible. They can be used alone or in combination with the technical analysis tool, such as the moving averages and the moment oscillators. They can be used also with the methods such as the Dow theory or the Elliott wave theories. Candlestick chart can be applied to follows as many as market as desire. Their stocks, futures, currencies or commodity. In other words, a trader can apply the candlestick principle to analysis or trade the Malaysian stock, index future or the crude palm oil futures. If trader wish to diversify their portfolio, they can trade, for example, US stock, US futures, foreign currencies, Japanese or US treasury bonds, and for that matter, any commodities in any market around the world. Move on to reason number 6, time tested, dependable, and useful. The candlestick chart technique is time tested and has been refined by generation of use in Japan. The fact that it is still very much in use today after more than 300 years since its discovery is testimony to its usefulness. Move on to reason number 7, price movement. By looking at the candlestick, we can get the valuable information about the open, high, low, and the close of the price, which will give us an idea about the price movement. Move on to reason number 8, the human behavior and changing psychological factors. The human behavior in relation to money is always dominated by fear, greed, and hope. Candlestick analysis will help us understanding this changing psychological factor by showing us how the buyers and seller interacting with each others. Candlestick provide more valuable information than the bar chart, using them in a win-win situation because you can get all the trading signal that bar chart generated with the additional clarity. The additional signals generated by the candlestick. Move on to reason number 9. Market action discount everything. All the technician is really claiming is that the price action should reflect shifting in supply and demand. If demand exceed supply, price should rise. If supply exceed demand, price should fall. This action is the basic of all the economics and the fundamental forecasting. The technician then turned this statement around to arrive at the conclusion that if the price of rising for whatever the specific reason, demand must exceed supply and the fundamental must be bullish. If price falls, the fundamental must be bearish. Move on to reason number 10. History repeats itself. Much of the body of the technical analysis and the study of the market action has to do with the study of the human psychology. Chart patterns, for example, which has been identified and categorized over the past 100 years, reflects the certain picture that appears on the price charts. This price reveals the bullish or the bearish psychology of the market. Since this pattern have worked well in the past, it is assumed that they will be continue to work well in the future. They are based on the study of the human psychology which tend not to change. Another way of saying this, the history repeats itself, is that the key to understand the future lies in the study of the past, or that the future is just repetition of the past. Move on to reason number 11, the market actions. Technical analysis is the study of market action, primarily through the use of the chart for the purpose of forecasting future price trends. The term market action includes the three principal sources of information available to the technician: price, volume, and open interest. Open interest is used only in futures and options. The term price action, which is often used, seems too narrow because most technicians include volume and open interest as an integral part of the market analysis. Move on to the last but not least, the reason. Stock price moves in trends. Some of those trends are straight, some are curved, some are brief, and some are long continued. Some are irregular or poorly defined, and others are amazingly regular or normal, processed in a series of an action and reaction waves of a great uniformity. Sooner or later, this trend changes direction. They may reverse or they can be interrupted by some sort of sideways movement and then after a time process again in the former direction. That's it for the video. You should take your time to understand all the concepts discussed in this video. Take your notes and go back from time to time to review the strategy which has been shared with you. Please subscribe to our channel and click on the bell icon to get all the notifications for our upcoming videos. Please like the videos and provide your comments if any. If you feel the content of the videos are knowledgeable, then please share this video with your colleagues and friends. Thank you for watching this video.